We actually got it this time. What's good, everybody? This is Mark Monroe, and this is Hot Take Thursday. Jolynn, how are you doing today? You were scrolling. What's going on?
Yo, I'm trying to pull up this live so I can share it to my peeps.
Okay. Well, today's going to be a pretty dope episode. I mean, what do you think?
Man, I've been waiting for this episode.
Yes. Yo, go ahead and fill it in. I heard something though. It was very, very interesting because I heard on EYL, somebody went into the super chat on Monday on like their Market Monday show and said that The Dark Knight is done.
What?
Yeah.
What do they mean by that?
I don't know, but they were definitely dropping bombs in the super chat. But yeah, they said that The Dark Knight is done. And you wouldn't believe who it was.
Who?
It was apparently a person who calls himself the Black Panther.
Really?
Yeah, that's kind of crazy, right?
That is crazy.
Huh.
Interesting.
All these may need to check in on that one. Because if the Dark Knight is gone and if the Black Panther has, ultimately shown up, we're going to need a different emoji if that is true. We probably need to invite that person onto the show. What do you think?
Yeah. How about, well, I'll check the production schedule and see what we can do.
That sounds like a plan. And for everybody in the chat, thank you for joining us today. Oh, wow. Everybody's like shouting out the Black Panther in the chat. That's crazy. So I guess apparently they know something that we don't know. So I guess we got to stay tuned and find out.
Yes, so.
All right. What's good, everybody? Today's Thursday. And you know what today we do is all about fundamentals. But we're going to do it with a slight little twist today. Because today we're bringing something a little bit special for each and every single one of you because you've been asking us questions and we wanted to give you answers. So sit back, sit tight. If you've got your water, you know how we do. Stay hydrated.
Get my water. You got double fist in there.
And then also, wow. Yeah, I'm excited for this episode. As you guys can see, the title of the episode for today's Hot Take Thursday is called Money Never Sleeps. Jolynn, let's talk about it. How are you feeling about today's market? And apparently there may even be a burner account that we may find out.
Well, I'm excited about the burner account always. Burner, that's for Matt Reese. But I'm excited about the title of this video.
Oh yeah.
Especially as it relates to, some of the things that we were talking about last week with the rolling fours and, just gearing up for particular events that are taking place next week. Everyone's all excited. And so I feel like this title is beyond appropriate. For Money Never Sleeps because, man, the rolling fours,
the rolling fours and the 70-30 took it to a whole nother level. But I felt like that's going to be ongoing mini series that's going to be taking place as people go along in the journey, right?
I agree.
So I think and to do each and every single one of you justice, it makes sense that we continuously build upon that. We've given you quite a few blueprints and foundational pieces, so of course we've got to build on top of it until we get to 50K, and then when we get to 50K, we just.
But so what's funny is I get messages all the time, Mark, man, I can't even imagine what's going to happen at 50K.
I'm excited for 50K. So the road to 50K, I'm just letting you know. But let's get some housekeeping out of the way, shall we?
Yeah, we
First off, thank you for each and every single one of you that have logged in today when shouting us out where you're coming from. We love each and every single one of you. And on top of that, if you are subscribed, then you definitely know what it is. Thank you. We appreciate you. If you haven't yet, button's right there. Just literally just.
Is it right there? Is it right there?
I don't know. It depends upon where we're at, but just press it. And also, if you like our content, please go ahead and like it because apparently it does something to this YouTube algorithm thing. But I mean, if you didn't like it, that's fine too. You can go ahead and hit the dislike button and tell us why. We definitely want to know why. And if you want to be in the know for the notification squad, I mean, go ahead, join the Cool Kids Club. And whenever we drop a video or when we're premiering something, you'll be in the know with everybody else. So, but let's get into this market because we gotta get it going. Today is jam packed. So.
Right. So red, we have to sum it up in one word, red. So, okay. So y'all, the Dow was negative 405.89 points. S&P 500 was negative 59.77 points, followed by the NASDAQ at negative 221.97. For sector performance, red. All 11 sectors, red. We have the top three: materials, consumer staples, and industrials. Then the bottom feeders are utilities, tech, and energy. Now, for our pick performance, y'all, we had to switch it up because, Boeing.
Oh, can I tell them?
Yes, you can tell them. Go ahead.
I'm so excited, y'all. So apparently we got a call from the front office and they told us, yo, flag on the play. We definitely need to make some switch ups. Apparently we need a new pick. It's free agency time. So we're throwing in an emergency free agency. This is once in a lifetime opportunity here that we're putting it out there. And I've been very, very quiet about it, but you may hear me talk about it a little bit later. But today, officially, it is time for Boeing to exit right. And coming into its place, they are known for some red.
Not today, though.
But not today. And that company's name is Tesla. Tesla is now part of the come up pick list. So welcome, Tesla. Welcome.
During our production meeting, don't laugh. And I actually don't even want you to say anything. You can't even sip. But I did have to get the Cybertruck.
Wait, hold up. What?
I had to go on ahead and do it because I was just like, you know what? Like, I'm gonna need it for some of the projects that are upcoming. I'm gonna need it.
Okay.
So, putting that out there.
Welcome to the family. Welcome to the family.
Thank you.
Now, so does that mean that you're gonna have 2 Tesla vehicles?
Yes. Yes.
We'll talk your stuff.
Well. Okay, so back to the pick performance. So because, Boeing got the boot, now Tesla is in the mix. Top performers for our pick list. Out of 24 stocks, Tesla came in at number 1. The only one that was green today, followed by TSM, Taiwan Semiconductor, Adobe, and then the bottom feeders were K-Web, NVIDIA, and AMD. For now.
Oh, you know what we said when there's blood in the market.
Deals, y'all. Scoop up these deals. Okay, so
we're seeing stuff happening in super chats right now. So of course, for those that don't know, Jolene, we gotta let them know where their money's going.
Yes. Okay. So if you've been following along this week and also last week, then you know that this week, and as well as last week, our super chat dollars, or your super chat dollars rather, are going towards the People School for Positive Education in Kasawa, Ghana. Super excited because this is a school where I teach art. They have a 100% graduation rate. And what's even more cool is that oftentimes the students, once they graduate and then go on to college, they come back as teachers. Mm-hmm. So that is really cool to establish that type of love for the school that you want to come back. And then they have a great salary as well. A competitive salary, probably more than what you would get around the surrounding areas. So just super excited that you all are rocking with the People School, and we appreciate every single super chat dollar that goes to the school. And what's also cool is that I don't know if I'm pointing at you. I think I am. Am I pointing at you?
You are.
Mark is going to match your super chat dollars, dollar for dollar, pound for pound, round for round. Okay.
Let's go. Oh, wait, did you just make a sports reference?
I did. Are you proud of me?
Oh my God. There it is. There it is.
Do a little something, you know. Yes. So I'm really excited about that because I'll be there. Well, you'll be there too next year. So anyway, that was the market update, y'all. I mean, like I said, it's red.
But I'm still sticking to the script. I mean,
I'm sticking to the script.
I had, if anything, I had a nice little shopping spree today.
Okay.
But I'm still, a vast portion of my capital is still waiting for Monday, which we have a surprise for each and every single one of you, because many of you have been asking us how to roll. But, you know, like I said, this episode is going to be completely jam-packed. So just sit back, relax, prepare to take notes. We'll give you a quick second. All right, Jolene, go ahead and tell us, like, you know, because we're missing a box, but we're missing a box. And I think it's time to reveal that box of who's joining us today.
Okay.
Is it time? Is it?
I think it's time, but you know, it really depends. It really depends.
Ready.
Oh!
We are so excited. Okay, we are super excited, you all, for our special guest. Our special guest today is Mr. Christopher Bush. He is a native of Goshen, Mississippi, and a graduate of Tuskegee University.
You know. Let's go.
Talk your stuff. All right. He is currently the owner of Wealth After Work LLC, an investment advisor, and also he has a very diverse background in just plenty of things. One thing I do want to note about Christopher is that he embodies the spirit of generosity.
Yeah.
Which is a value that, you know, we hold dear here at the Come Up. And just even in my first meeting him, I could just see it, like in how he speaks, how he talks, how he thinks. So generous. And we are just so happy to have you here, especially since last week, as you know, Christopher, we were talking about the rolling fours. And we need to tap you in so that we can talk about strategy and how we can look about setting our accounts up. What's the best account to set up? Are we, you know, if someone is a W-2 employee, if they're a business owner, all that. And y'all, Chris had it like this, okay? He didn't even breathe. I think he just said it all in one breath. And I was like, what about this? What about this? And he was just answering all the questions.
On it.
Yo, Christopher, welcome to the Come Up.
Thank you. I appreciate you guys. Look, I'm excited. Let's get it.
All right. So, Chris, like, tell the world a little bit about you, because I may have, you know, possibly name dropped you in a few Instagram lives, but tell the people about what is it that you do, and, you know, your love for what is it that you, and your love for, of course, financial advisement and planning. So, yeah. Go ahead, brother. Take the stage.
Yeah, so it's crazy. Wanted to be a business owner, never wanted to be an advisor, never wanted to talk about stocks, bonds, mutual funds, portfolios, 401ks. That was never me. You know, Mark knows me from school. I was two things. Number one, I was engineer geek, so I always stayed in the engineering building, right? If I wasn't at the engineering building, I was on a basketball court because I played basketball, right? So those two things didn't match up, you know? But right when I graduated from Tuskegee, I started working at ExxonMobil Corporation as a mechanical engineer. So that was my thing. I had a dream to say, hey, look, by the time I graduate college, I want to make 6 figures by the age of 22. And it was great because that's what happened. At 22 years old, I started making 6 figures as an engineer. And most people think, well, that would be great. But at the same time, guys, like when I was 19, I realized that me just going to college, receiving a bachelor's degree, going to work for a major company like ExxonMobil at the time, what we talked about on the Come Up was like literally the #1 company, right? Fast forward 10 years, now it's all right off the S&P. But see, at that time, that was a big deal, you know? So what happened was my parents were trying to retire in 2008, but they just didn't know how, right? They didn't know how to save money, invest money, know where to go put it. So we actually lost $250,000 in the market. And at that time, I said, Chris, you know a little bit about numbers, go be an advisor. So I actually got my license at 22. Sole reason was to really help my mom and dad so they could retire, so they can start to build wealth. It's not because I wanted to get into this business to make money. It was purely education, just to kind of help my family. And fast forward, I was in corporate America for 5.5 years, started making more money part-time than I was 6 figures as an engineer. So I quit. And now, you know, me and my wife, we run a business full-time now. We have agents across the country. We do a lot with personal finance, business finance, pretty much everything. And I love it now. Just that education is pure. And that's why I respect you guys and what you guys are doing, because it's huge. It's needed in our community, right?
Didn't I tell you guys he was generous?
That.
Hearing in the spirit.
You can just feel it. Like, so, like, all right. So, you know what, Jolene, I'm going to let you just take it. I'm going to just let you take it.
Okay. So, you know, we put out the signal for questions, and okay, so that probably was not the best way to do it.
Oh, by the way, Chris, they say slow it down a little bit.
Oh, hey, I'll try. That's just all. I'm always excited.
That's excitement. That's excitement, y'all.
Chris, you talk fast. I'm like this. You know, that's me, but I'll slow it down.
Okay. All right.
All right. So we had several questions that dealt with like strategy, accounts, and let me just pull up the rest of my
yeah, we had tons of questions.
I mean, there was a lot of questions. So I'm going to throw these questions out at you. And I know that you prepared something special for us. So
yeah,
I'm going to just throw these questions out just so that you know, have a mental check of them. So one, account structure. And as far as like, what's the best structure? Backdoor Roths. Setting up a business 401k. And then also, people wanted to know like if you had any tips for moving closer to or moving to the 70-30 so that we talked about expenses and investments.
Perfect.
And then all of that wrapped up.
I was gonna say, are we gonna get into a little bit of the rolling fours as
right.
well?
Yeah.
Oh, okay.
Yeah, all of that wrapped up within the context of rolling fours.
That's a lot, Chris. Can you handle it today?
I'm typing it up now. Like, look, we got a full plate, but I'm ready.
Okay. All right.
All right, so let's go. So the first place we're gonna start, I'm gonna share my screen now.
Let's do it.
And we're gonna get it rolling. All right, guys. So this is what I kind of put together, right? So the proper foundational account structure so money never sleeps. So, you know, we got so many questions on account structure, and I was reading like in a Facebook group. I was kind of silent, but I've been peeking in, spying on a Facebook group, and I was like, man, I should comment, but you know, I'm gonna wait to the night, you know. So think about this, guys. I got a couple things. Now, if you're a W-2 employee, right? So if you're in a W-2 employee, put that in the chat. Say, hey, look, I currently work for somebody, but look, I've got a plan over the next 3 to 5 years to pretty much leave them, right? That was my dream, right? So put that in the comments, guys. If y'all are ready to leave the job, you're over it, right? But I'm gonna show you guys how to create a great financial setup, okay? So number one, right? Let's start from the beginning. So we have a checking and savings account. Of course, our goal right here is to cover monthly bills and expenses. But just like we understand on the come up, we want to make sure those monthly bills and expenses are less than what, right? Less than 30%, right? The second thing is that needs to be, again, that's a typo on individual brokerage account, right? That's just at your local bank, right? Strategy in that savings, you need to keep a minimum about 1 month of income in savings, right? So for me, I personally don't like keeping a lot of money at the bank. The main reason why, because my money, again, it should not sleep. But see, if we have so much money working at the bank, we got 10,000, 20,000, 100,000 at the bank account, that money is not working. Does that make sense? So I honestly don't keep a lot of funds in my bank. I mean, if you feel a little bit comfortable of maybe having 2 months or 3 months there, that's fine. But me personally, I don't keep a lot of money in the bank that I just really don't need. Does that make sense?
100%.
So one thing that I focus on is, right, number one, outside of your bank with the true investment company, right? It can be with your E-Trade, your TD Ameritrade, or an advisory account like I set up for my clients. Again, we got to have a true emergency fund account, because if we're trading, again, this show, we're trading options. And one of the things is that it's so focused on long term. And if you were like me, you know, no matter how much I focus on long term and know that it's long term, I still get like that feeling in my gut when the market was dropping last week, when the market was dropping back in June, when the market was dropping back in March, right? You still got that feeling like, man, I hope this thing works out. But see, the biggest thing that gives me that security is that because I have an emergency fund, right? At least 3 to 6 months of income and savings, right? And again, that needs to be in an individual brokerage account, right? It needs to be tax efficient. It needs to be growing tax free. So a lot of you guys, if you guys don't know, there's a lot of tax-free and tax-efficient municipal bonds, right? That I can kind of build in a portfolio to where we should be getting between a 3 to a 5+% rate of return on money that if I need it, I can always go get it, right? It can be right back into my bank account within 24 to 48 hours. There's no penalties, there's no fees. Like it's just, look, if I need the money, I can always go get it. But at least that money is always growing and working for you, right? And of course, contribution is unlimited. Right. So I'm so big on making sure that part is set, because if that part is set, that's that security. We got to think about it. When we look at balance sheets, when we look at the P&Ls of companies, when we're researching companies, one of the first things that I look at is how much cash they have on hand.
100%.
So if people say, well, Chris, well, I don't know if I should have this much money on hand. Shouldn't it be in an investment, or should I be trading options? But you got to think about that. See, even though it's not the most sexiest account, right? It's the account that gives you a lot of freedom, a lot of leeway. When we have a correction, we can have that money there.
Yep.
Right. So that part is huge, guys. Right. The second account that you always want to have, right, is a short-term account. So this is what I kind of call a short-term account, but again, it's like a separate individual brokerage. Right. Again, I'm from the South. Like, I love some good food. So I don't like my collard greens and like my mac and cheese touching, right? Or my, you know what I'm saying? Right? So I don't, just how I don't want my food touching, I don't want my money touching for different purposes. Does that make sense? So I want to have that short-term account. So this account is set, right, for the next 3 to 5 years. These are expenses. Maybe you guys are planning on buying a home, getting a new car, going on a family vacation, buying a building, doing those type of things to where it's a planned purchase. Right. I even did this for me and my wife for our wedding. Right. Instead of saving that money to a bank account for 2 years, we put it into an investment account, let that money to do what? To grow.
Yes.
But see, it's so important to have this type of account to where you don't have to focus on withdrawing from your long-term trades. You can stay invested the whole time, because if you need something to purchase, boom, we pull it from here. Right. So it's normally like a moderate growth to like a growth portfolio. Again, max contributions unlimited. Okay, so that's on the personal side of that financial account structure.
Okay.
Now this is where it gets fun, Mark. All right. So if you're a W-2 employee, number one, we have a 401k plan.
Yep.
Okay, or 403b, 457, those types. So the max contribution per year is like $19,500.
Mm-hmm.
Okay. So a couple things. People say, Chris, well, should I contribute to my 401k if the company doesn't match? Right. I think that was one of the questions, right? So my thing is this: if your company does not match, however, you still need a tax deduction, right, or lower your earned income, you need to kind of contribute to your 401k, even if they don't do a company match, right? But that should be kind of later. Does that make sense? But with your current 401k plan, you need to make sure that you log on and see if your company actually has what you call a brokerage link account or a self-directed brokerage. Because one of the biggest mistakes that I see in most people's 401k is when we're investing it, is that they give us like a list of options. They give us like 20 to 30 different options that we can choose from to invest in, normally like mutual funds. Okay. A lot of times, most people, Mark, are kind of like in a target dated fund, right? To me, that's like an easy mac and cheese. You just add water, it tastes horrible.
So quick question. How many people, like, would you say that when you run into are in those types of accounts, like the we like to call them the mac and cheese accounts?
Easy mac, at least 90 to 95% of people when I sit down.
And why is it that we don't like those?
Because the target dated fund is supposed to be say, hey, look, it's supposed to be aggressive while we're going up, and then it's automatically to be conservative. However, during that time where it's supposed to be focused on growth, the rate of return is not there. The growth is not there. It's capped. It's like having a governor on your car. Okay. So one of the keys you can do is if you open up a brokerage link account or a self-directed brokerage, you can make sure that you can actually pick the stocks that you want. You can actually pick the best mutual funds that you want. You can actually build the best portfolio, right? So that's what I focus on doing with my clients. We'll craft a entire portfolio to make sure it fits their needs. So if we're getting a company match, let's get the best match. If we needed to lower our income, okay, let's lower our income, but while getting the best optimal growth that we can.
Dope.
Right? So now when it comes to like our trading, okay, is now for you guys to always have a structure of a Roth IRA. Okay. If you guys are doing option tradings that we're doing here, you should pretty much open up a Roth IRA and trade options out of there. So that way all your gains will be tax-free. However, there's some people on the call I know that I spoke with, Mark, that let's say, well, Chris, I make too much money to contribute to a Roth IRA. So what do I do? Right. So see, this is when you need to set up a backdoor Roth.
Now, what is a backdoor Roth for those in whom which that don't know?
Right. So a backdoor Roth is this. That means this is what you want to do, is because, again, the IRS says that, look, you only can contribute up to $6,000, right, if you're under the age of 50, $7,000 over the age of 50 directly to a Roth IRA. However, you're capped on income. So if you make too much money, this says, well, you can't directly contribute to a Roth IRA. But the IRS says, well, there's a limit for you directly contributing, but there's not a limit on how much money you can roll over. For instance, right? If this is the case, so this is what we do. Instead of just setting up a Roth IRA, first we set up a traditional IRA. We make a lump sum contribution of that $6,000 for the full year. The moment that money hits that account, literally next day, before there's any type of gains or real fluctuations, we immediately do a Roth conversion and convert that traditional IRA money that was after tax to a Roth IRA. So now when you're trading those option contracts, now that money can be completely tax-free going forward, even if you make too much money to actually contribute up front.
That's dope.
I like it.
Dope. Now that's a lot of jewelry that you just dropped there. That's a lot of jewelry. So, okay. So if for those in whom which that probably just came late, what would be, say, for example, to summarize it up for them? Because there's a lot of folks that are saying, like, you know, what is he saying? Because he just mentioned a lot of information. Now, for those of you that are struggling here, you can always go back and replay it. But for those that are just coming in, Chris, go ahead and summarize what you just said.
To summarize it, guys, if step one, if you're trading in our options, let's set up a Roth IRA, right? You should be trading out of your Roth IRA first, right? If you make too much money to contribute to a Roth IRA, you need to contribute to a traditional IRA first, let the money hit the account, let it settle, then do a Roth conversion and convert it to a Roth IRA afterwards as a rollover, right? That's the main key, right? On the account structure portion of it.
My guy. All right. So, but what about for, say, for example, those in whom which own businesses, though? Like, because we do probably have some entrepreneurs that are on this, that are in the chat, or that definitely follow along with the Come Up series. So how will we help them?
Yep. And don't let me forget, Mark, to talk about the rollover portion of it, because there's been a lot of calls that I've been getting, or people. Okay,
go ahead. You can take it now.
Okay, because this is kind of in a transition. So I got a lot of calls about people. Okay, Chris, well, I've been working from a previous company, right? What can I do with that money? Well, the good thing is, guys, I always say this: would you ever leave money with your ex-boyfriend, ex-girlfriend?
Nope.
Nope.
That makes sense. So when you leave a company, right, when you leave an old job, you always want to take that money over with you, okay? So a lot of times you can do two things, right? You can do, number one, you can roll that money over into your new 401k plan. However, I traditionally don't really recommend that, because now I'm limited on how I can invest the money. I'm only have access to the funds that the company gives me. Or number two, we can roll that money over into a non-contributory IRA, which is technically a Roth IRA, but it's just saying that I'm not going to contribute to this account. It's only for rollover purposes. Okay. And the big key for that is this: the reason why we would have a separate non-contributory IRA account is because I don't want to commingle after-tax money with pre-tax money that has been rolled over.
Right.
Did that make sense?
Yeah, that makes sense.
Okay. So that's so important, guys. We want to make sure that we set up, again, if you're contributing to a traditional IRA, that should be one account. But if money has come from a rollover, it should be a separate traditional, or what I call a non-contributory traditional IRA, that only pre-tax money comes from rollovers, and now we can trade options and going forward from that standpoint.
All right.
I like it.
And
let's keep it rolling.
Come on. And then the next thing is this. So for our business owners and self-employed, now this is this is completely bare bones on how we should set this up. So we understand the left-hand side is pretty much the same, right? From a personal standpoint, from emergency fund, a short-term account, okay? So now if you have a business, right? And again, guys, it needs to be a legitimate business. You can't say like, okay, I don't have a side hustle. I don't have a business now. I'm just gonna go automatically open up an LLC tonight, and I'm just gonna automatically start trading out of my 401k, right? Honestly, guys, it's not that simple. You wanna make sure that you consult with your CPA, right? Or tax advisor to make sure you understand this part, right? We just can't just set up LLCs and say, hey, look, well, I'm gonna trade out this LLC and I'm not gonna pay any taxes. You have to be trader tax status per the IRS, and that's not something that is easy to get, okay? So if you have a legitimate business, a true LLC, right, or a company, what you can do, you have two options, okay? Number one, you can set up a 401k plan in the name of the company, right? So this is like what I did, right? You can set up a 401k or a SEP IRA. Let's start off with the 401k. So with the 401k, when you set up as a company, so remember, you're also the owner of your company and also the employee. So it gives you two things. Number one, from your employee side, it says your employee contribution, your W-2 contributions. You can still contribute up to the max, up to $19,500 plus the $26,000 per year from your W-2 side. If your company, again, is paying you a income from your business, right? And again, if you guys have a business and you're not set up to where you're actually on payroll from yourself, that is so important, right? We got it. Please get with your tax advisor. Make sure that you have a bookkeeper and make sure that those things are in place, because it would change your life. Okay. So now we got from that W-2 side, we're able to contribute that 19,500 or the 26,000 over 50. So with the 401k, what you can do as a solo 401k, right? E-Trade has them, TD Ameritrade has them. They all have these accounts. So you can contribute a total up to 57,000 per year. That's employee plus employer contributions together. However, this is how this works. If you're paying yourself, let's say $100,000, right? Did y'all give me screen writing privileges? Okay, boom. So yeah, right. If you're paying yourself 100 grand, okay, from your W-2 income, so technically you can contribute that 19,500. However, what's going to happen? You can have a 25% profit sharing from your company. So now you can have a profit sharing portion of your plan, and you can contribute another $25,000 in the profit sharing. So just in your corporate plan, you can put away what, up to $44,500 just in your corporate plan. So now why use if you're an employee, if you own a business, you don't need to use a traditional IRA. If you own a business, you technically don't need to use a regular Roth IRA in the beginning. You can literally have your 401k contributions be Roth contributions or pre-tax contributions. I know I said a lot right there.
That's dope. I mean, no, everybody's like chatting in the comments. So a lot of folks are asking, because many folks are saying, I'm hearing a lot of folks saying that they're sole proprietors. Does this also apply to them? Correct.
It does apply to sole proprietors, right? But and again, consult with your tax advisor. If you're a sole proprietor, right? Again, you're probably paying an extra 15.3% tax on self-employment tax as a sole proprietor. So that means you're filing a Schedule C. Right. So if you just transfer that to an S Corp, now you get the purpose of an S Corp, again, talk to your advisor, and the purpose of an S Corp, right, we can take away that 15.3% self-employment tax. So again, instead of working as a sole proprietor, go ahead and file the S election for your LLC, right? And structure yourself as a true business, not a sole proprietorship. Saving money on taxes, that extra 15%, especially in California, right? I mean, we need every single penny that we need. Right? So just on that scenario, on that 100 grand, I mean, that's 44,000. Now, if you want to do pre-tax, you can do pre-tax. But if you can set up your corporate plan, because again, you have the power. When you own the company, you decide how your plan design is written. Right?
This is super duper dope, Chris. Like, we're seeing a lot of folks in the comments. Actually, shout outs to Kelly Landry, who's also a CPA, who's literally, you're getting a lot of confirmation in the comments, brother. So keep it rolling.
Good. So a couple gems I want to kind of end on this part. So think about this, guys. The good thing is if you guys are on this call and you're an employee, you got to do your best to make sure you can break free and become a business owner. there's so many ways that you can become a business owner right now for online. I mean, different, self-employment, some stores, Amazon, or whatever you got to drop ship it. I mean, there's so many ways that you can become a business owner, right? You got to start taking your part-time money that you make part-time and start saying, look, I'm going to have a goal of making more money part-time in a business than I do on my full-time job.
Come on now, Chris.
Right? Why is that?
No, hold on. We're not going to let that pass. Say that one more time for the class, please.
If you're a W-2 employee on here, you got to do your best to start making more money part-time on a real part-time business than you do on your full-time job. Two things, guys. If you're an employee, you're paying like 35 to 40% tax. You can, when I was an engineer, guys, I said, yeah, I make 100 grand, but that's not true. I was making like 60 after taxes. Right? See, as a business owner, we pay taxes on what we have left at the end. As an employee, we pay taxes first? So why this is so important, right? You can start to get creative with your financial plan. So I'm gonna kind of give you a scenario on how I set my plan up on how I'm utilizing the strategies, Mark, that you guys are teaching us. So think about this, guys. So I have a 401k,
okay,
right, that I'm contributing to. So me and my wife, we contribute, right? Well, because we're a household, all right, I can contribute 19,500, she can contribute 19,500.
Right.
Right, plus we both can get a profit sharing.
Yep.
Plus we have an employee that we offer the 401k to her. So basically, when you look at it from our corporate side, we can pretty much almost put away almost $100,000 plus, right, just against the business, and also contribute to our accounts. But check this out, Mark. Remember, if you're a W-2 employee, can you trade options inside of your 401k plan?
I heard that you could.
Right?
I heard that you could. But again, not a financial advisor.
So I'm gonna go back. So actually, again, and you got to check your plan. Most plans, Mark, honestly, most people's plan, you cannot trade options out of your 401k.
Yep.
Right? Because again, if you don't have a brokerage link, they're not going to let you trade options, right? But again, typically you can't trade options inside of your 401k unless it's written in the plan.
There it is.
However, guys, when you're the owner, when you're the employee, and you work with the third-party administrator, that's called the TPA, and you actually write your plan design for your company, you can actually put in a plan design to where, hey, look, I want to set up my 401k, but I want my 401k linked to TD Ameritrade, linked to E-Trade, right? And then in the E-Trade and TD Ameritrade application, they will ask you, what do you want to buy inside of this account? Do you want to be only able to buy mutual funds? Do you only want to be able to get ETFs? Do you only want to just do stocks? But see, there's a whole nother section, Mark. Now, when you own an account, your own self-directed brokerage account inside your own 401k, now you can trade options in it.
And that is where you can trade options within a 401k.
So now think about that. Think about how difference is. See, as an employee, if you're doing a Roth IRA, you only can contribute $6,000 and that money be tax-free.
Right.
However, if you're a business owner, right, and you have a 401k plan that's attached to a self-directed brokerage that allows you to able to trade options inside, now you can put away $19,500 or $26,000 right per year, completely tax what?
Free.
Come on now.
Yo, we talking about freedom. W-2.
Right. But see, and again, that's just on the W-2 side. But see, remember, you're getting a profit sharing for your company. That's another $25K that you can put in again. Right? So it's so important when you set this stuff up. I mean, the information that you guys have been given, again, I've been doing this for 12 years, Mark. And again, most people say have a negative connotation about advisors because there's fees and the 1% and all this type stuff. You know what I'm saying? About just kind of pushing you into a product just to make commissions and not giving you that true knowledge. See, what I respect about you, Mark, and Jolene, what y'all are doing with the Come Up series is that we're just being completely transparent. My thing is, when I'm working with a client, we're going to put you in the best position possible, but we got to get the right structure together.
Right.
Because when you do this, having 10 million in the next 3 years, 10 million in the next 5 years.
Hey.
Talk to him.
Right? Think about this. We're talking about, getting some 401k long. If you have it built correctly, you should be getting between a 9 to a 12+% rate of return. Yep. Okay. If you're under the age of, let's say, if you're under the age of 50 and you don't plan on retiring in the next 10 years, Remember that. The reason why I cited it, because there's pretty much never been a 10-year period in any portion in history where the market's been what? Down. If you have 10 years before you retire, we can be a growth or aggressive focus in our accounts.
Yep.
Right. So with that being said, right, with this plan to think about long term, right, we can focus on growth. We don't have to worry about the market ups and downs. We can do everything that we want.
Yo, there's a lot that you sparked a lot of conversation in the comments section. Yo, somebody said, I'm sorry, 10 mil. We're not gonna get to that, but that's for a whole nother day. But a wise person once said, once you make it to 10 million, it all feels the same. All right, so check this out. So we have some questions in the comments, and they were saying, well, what happens if I've already maxed out, say, for example, my Roth, but I have more capital that I want to put in? What do I do?
Perfect. Let's go back to it. So I'm assuming they W-2?
Let's just assume that they are W-2 for now.
Perfect. So if we're a W-2, right, employee, and we have maxed out our Roth IRA or our traditional IRA, this is where you can take that. You'll have extra money. Well, you can take that extra money and put it back to your what? Short-term account, your individual brokerage, and now you can trade out of here. Dope. Right? All that extra money should be trading out of this individual brokerage account. And this is one thing I was kind of toying with, Mark, is that part of me wants to say you need to have a separate short-term account and not commingle it with this short-term account.
100%.
So the reason why I say that is because, again, the reason why we have this structure right here, because this is for purchases in the next 3 to 5 years. Well, if we're talking about rolling positions, right? I don't want to be caught up on some of my money in an account where I'm rolling a position in option, but I need to pay for the down payment for my home, or my kids are going to college and they need money, those type things. So let's not, I'm gonna be just, I would say go ahead and make a totally separate account, right? For those extra contributions that are not really what you're gonna use for short-term purchases.
Dope.
So Chris, then how many accounts typically then, like based on all this that you shared, how many accounts would a W-2 employee have? And then how many accounts would a business owner have?
Perfect. So in the best case, so we say it was 1, 2, 3. So as an employee that's making less than, let's say, 124,000 or 132,000, right? Since somebody, a CPA, correct me in the chat, I always get the numbers mixed up, right? But whatever the limit is for the Roth IRA, you should pretty much only have 3 accounts. You can start off with just 3 accounts.
Okay.
Right. So if you're, again, I'm not counting like your 401k here, right, as an account, because that's just like with your company. But I'm not saying accounts that you actually open outside the job.
Right.
Right. If you make too much money to contribute to a Roth, boom, it's you need to have 4 accounts, because that would include your traditional IRA plus a Roth IRA for the backdoor Roth.
Now, we are seeing some folks out here that are opening up multiple IRAs because of the fact that they've contributed to the max. What do you have to say about that?
Okay, so one thing is this: if you say, well, Chris, you know what, the IRS, I heard that if I only contribute $6,000 to my Roth, I'll just open up 6 of them things. I can contribute, 36,000. You can't do that. So no matter how many IRAs you have, no matter how many Roth IRAs you have, you only can contribute $6,000 collectively on all those accounts. It does not add up. Okay. However, if you're in a situation right now where you have 2 Roth IRAs or 2 traditional IRAs, you actually are kind of in limbo, right? You almost can get like what you call an excess contribution penalty.
Yep.
So prior to, I believe, April 15th, right? Or I would do it by year end, right? December 31st year end. You need to make sure that you call TD, call E-Trade, call your broker and advisor, and make sure that you can remove those excess contributions.
Somebody says, I have an operating company and a holding company. I just recently opened a brokerage account under my holding company to trade options. What do you think about that?
Perfectly fine. Right. So, even with me, so I have like one of my accounts is actually, I have a business brokerage account. Right. So I have a brokerage account in the name of my LLC, right, that I'm trading out of. Just remember, just because I said this earlier, but just because you open up an LLC and have an LLC brokerage account, that does not mean that you get any other different type of tax treatment. Okay, you can't I know we're going to give a resource. So like one of the good resources that everybody should go get, this guy right here. So it's called Green's 2020 Trader Tax Guide. Because a lot of people, they say, well, Chris, I want to open up an LLC or trade out of my LLC because I think I get an extra tax deduction, right? Because I can do that. That's not necessarily true. You actually have to qualify to have trader tax status. There's a bunch of rules, and I don't even know if we have time to get into all that, but it's a bunch of rules that's really difficult, right, for you to actually qualify per the IRS to write off a bunch of losses from losses in an account from an investment standpoint in a brokerage LLC.
Now, some folks are asking about HSA.
Right, a health savings account.
Yes.
All right, boom. So you can also open up another one of those as well, right? Okay. And again, you can also trade out of there, right? Again, your TDs or your E-Trades can both open those, but you want to make sure that you have a high deductible health savings plan in order to do the HSA.
Boom. So the moral of the story. What's the moral of the story, brother?
The moral of the story is, number one, these two slides that I went over here, if you get these two account structures correct, it will make your entire life, when it comes to your financial plan, totally different.
Okay.
It's definitely going to be different, right? And I can go over even so much more from the business side. We'll kind of get that later, but on the business side, these are a couple accounts, but as a business owner, just kind of talk about a full plan. A business owner should also have a separate account that they're saving for taxes.
Yep.
Right. And again, that tax account for me is not into a bank account, right? If I'm saving money from taxes from the profit of my business, my 15 to 20%, that money is also doing what? Working. It's also moving. It's also invested, right? I need to gain interest while it's being held in that account before I can pay my quarterly taxes.
Now,
I have a question.
Go ahead, Jolene. Go ahead, because we got a lot.
Someone asked this earlier. What do you look for in a CPA? A good one.
I think the first thing is this, because a lot of people think that they have somebody that does taxes. A tax preparer and a CPA is totally different, right? A tax preparer they're only seeing you once a year. Your CPA should at least be meeting with you minimum of 4 times a year, right? I pretty much talk to my CPA every single month, right? One of the big key things of picking a CPA is, do they know your business? Right? So if you're a real estate investor, have a real estate company, but you're working in a CPA that doesn't have any other real estate clients, then they can't effectively understand how to maneuver the tax code if they don't specialize in real estate. If you're working with somebody that does your taxes and you're a business owner or you're an entrepreneur and they don't work with any entrepreneurs, again, if they're only doing Schedule Cs and 1040s, right, then that's not a good fit for you. So you got step number one, you got to find a CPA that's in your niche, right? That works where you work. Now, if you're W-2, honestly, guys, I wouldn't spend a ton of money with the CPA in the beginning, but once your income starts to really grow, you really need that tax advice. But I'm highly recommend, if you have a CPA, and if that CPA does not work with a bookkeeper or doesn't have bookkeeping services, that's not the CPA for you.
Okay, so it sounded like for, a team, we would need the CPA, bookkeeper, a financial
advisor, a tax attorney, an estate planner, a private banker.
Okay. The whole team. You're about to be creating your whole village to manage your wealth. Remember, we're talking about wealth here. We're not talking about riches.
Exactly. Because you understand, the rich and wealthy, like they focus on working what you call a family office. I know people heard that before, right? So again, your CPA should always be talking to your bookkeeper, and those should be two totally different people, not the same person. You don't want the same set of eyes on your books.
Can I ask a question?
Yes, ma'am. Yes, sir.
How do you think that the wealthy are able to protect their wealth over large periods of time?
Pretty much by what we just discussed.
Okay.
Number one, by having a financial team, right? That's the expert in their field, right? I don't try to, even though I know portion of the tax code, I try not to overstep my boundaries of what my CPA can do. The minute that you put all in your wealth in one person, that it can't be contained that way.
Right.
Right. So the rich and wealthy, the reason why they're able to keep so much of their wealth is because of the communication, and they have experts at every single area, right, that they need to move their financial life forward.
Chris,
Exciting.
fam, you just hit us with a lot of fire, brother. That's
Come
a
on.
lot of firepower. All right, so how can they find you?
All right, so this is so crazy. A lot of people always ask me, Chris, what's your Instagram? Chris, what's your LinkedIn? And I'm honestly, or Facebook, I honestly have never really been active on social media from a business perspective.
Okay, that's crazy because we did add in your Instagram handle.
Yes, yes. Oh, but Mark, I promise you, I'm working on it. Right. So going forward, I'm gonna make sure I'm posting content, get my social media. But honestly, guys, my business is mainly through referrals. And I do a really good job with every single one of my clients. So the 12 years that I've been in business, I never had to talk to strangers, never knocked on doors, never cold call. It's mainly about referrals. So
Right.
social media to me is like, man, it's great. But it's like, man, if I turn on social media, it's over with, right? The floodgates open. So what I'm doing now is that, I'm super excited, Mark, from your mentorship and you and Jolene and just like this platform is I'm excited about, putting together a program, right, for the come up, right? That's gonna like what we have here.
Are we saying that we're going to be having a series?
Yes.
Oh my! You've heard it here. It's official.
Right?
Coming soon.
Yes. So we're going to have a series where, Mark, I'm going to really break down every single one of these strategies, account structure, go into detail on each account, setting up an account. I know a lot of people had questions on, for custodial accounts, right? 529s, UGMAs, right? Coverdales, right? I want to take you through a full financial plan to make sure, look, when over these next 2 to 3 years, that not just our money is set, but our financial foundation is set. Mm-hmm. Right? And but for right now, I'll be posting everything going forward. I got a soft launch on October 1st. My Instagram is Christopher W. Bush, right? And it'll probably mainly be on Instagram. I believe my LinkedIn is Christopher W. Bush as well.
Yep.
And then also Facebook is also Christopher W. Bush. Everything's Christopher W. Bush except for Twitter. My Twitter account is actually C Wealthy B. So C is in cat, then the word wealthy, then B is in boy at the end. So those are my 3 handles. But I will be posting and getting everybody together, and it's going to be powerful, Mark.
We're ready. We're ready.
I think we are ready. Shout out to all those going crazy in the live chat right now. And then,
we did have one question though.
What was that?
If somebody asked if I would like to be a financial advisor or planner, how do I do that?
So a couple things. Number one, you typically have to be sponsored, or you can take your Series 65 exam and you can become your own RIA. But one thing for me, if there's some people that are interested in learning the business of becoming an advisor in the debt, investments, insurance area, I actually have a firm, right, that I actually hire and train people to actually learn everything that we go over. And if you guys are in this group, I highly suggest people to even look at that, because when you're seeing this side of the business, now you can see everything. Now you're learning all the foundational because now you're licensed to do this, right? And now you can take this information that we're learning from the come up, learning to get in a financial plan, and now we can have our own little villages across the country, right? It's just a vision. I know there's a lot of people here in California, like in my office, I'm like, well, why wouldn't I just have a local meetup in California, right, for the come up series, right? Why don't we have local events? But see, if you're an advisor, now we can spark that. Now we can pretty much take over and really get this information to our communities.
Yes, I'm here for it.
Woo!
Yeah. So yeah, if somebody's interested in getting licensed, please let me know. Send me a DM in Instagram, and I can kind of walk you through and help you get started.
It's too much sauce. Take a sip of water.
You know what? Let's take that sip.
Come on.
Water.
Cheers to you, brother.
Salud, salud.
Yo, but y'all, we're not done, because like we said in the title, money never sleeps. So Jolene, what's next? What's next?
Well,
we got Christopher Bush off the hot seat, y'all. So thank you, brother. Thank you.
Take a bow. Take a bow. Thank you.
Take your bow, brother.
Thank you, my friends.
Well, we need to learn about this rolling. We got these rolling fours coming up, so we need to see a demo, Mark.
Huh.
Do you think you can fire up the burner account?
Do you think that they're ready for it though?
I mean, after Tuesday's butt whipping, I think they ready. I
don't know if they're ready. Like, they could be ready, but you know what? Let's show them the burner account. I think it's definitely time that we show them a little something something. So without further ado, we give you the burner. All right, so what we thought about doing was, of course, setting up an account. And so this has been running since pretty much January of this year. All right, so when we look at it, we see, say, for example, of course, we see the bad, which is the minus $12,150,000. But, all in a day's work, because when we look at it in, say, for example, the portfolio side, we're waiting for E-Trade to fire up. So here's where we are. Now, of course, this is essentially trades that get done over time to build up, say, for example, performance that we've, this is how we ultimately build up pretty much our war room for, say, for example, trades. Now, you never know who's managing it. So we'll leave that for surprise.
Wait, can you say how much we started with?
It actually says it right here, contributions made. This account was opened this year, and it was pretty much contributed at $5,000.
That's crazy.
Now, the one thing that I will say that kind of sucks about E-Trade is the fact that when you look at the total unrealized gain, it's like once you sell a position, it knocks out, say, for example, your total gain percentage. But when you go to like performance and stuff like that, then that's when it really starts to show you, say, for example, how is it that you've done? So year to date, the performance of the account is done 2,725 percentage points year to date.
I really love Agent Smith.
Mr. Anderson. All right, so let's go ahead and get it. So for many of you, you're asking, okay, hey, I'm in a position, and now we're getting ready to find out, like, for example, we see some positions that are getting ready to just open up, or new expirations that are going to open up. So let's go ahead and now, mind you, this is an E-Trade. Now, we can't speak on behalf of your TD Ameritrades, but we can probably assume that they all work exactly the same way. So if we look at it, let's take the most popular, the XLK, January 2022. Actually, no, let's go with AMD, because AMD, this position, apparently it's down 48%, but it expires March 9th, $92.50. So let's show them how you can potentially roll. Now, remember, the current value is about $3,500. Cash purchasing power is about $1,100. All right, so let's go ahead and say that we're going to roll this position in this account. All right, so here we have AMD. And when we look at it, so here's how you roll a position. Whenever you buy a option call, or any option, whether it's a put option or a call, you buy open. And then ultimately, when you're ready to get out of the position, you're going to sell it close. Now, the cool thing about this position is it's saying that, all right, well, it automatically places you at the next month. But we're like, maybe let's give ourselves another month worth of time. But at the same token, we want to pick a new strike price. Now, here's the thing. It's priced as 1-to-1. And the reason why it's priced at 1-to-1 is because there's 4 contracts that we're going to sell and 4 contracts that we're going to buy. So when we move it up to, let's say, we're going to move our strike price to 100. So somebody's going to place a $100 price target. Now, let me just show you a little bit of magic that just took place there. Currently, the debit would be, I would be paying an extra $1.10 per contract on this position. So just to show you exactly what that would look like, I would do, say, for example, the $1.10. So estimated total cost for me to do that is $444.12. Now, why would that do that? Because if you look at the bid size, you always sell at the bid and then you buy at the ask. So the differentiation between the bid and the ask is currently at $1.10. So I would be paying the difference. Now, where does the rest of that money come from to handle the $9.65? It takes the exact value from the current position that you're in. So that's how you keep the money rolling. Now, if you're doing this, then pretty much this is money that's coming out of your pocket. But for those of you that are already up in positions, and when you're looking to pick a new strike price, most likely your strike is going to be a little bit higher. So you're going to say, I'm going to take it for $100, not 110, but I'm going to take it for 100. And notice how it changes. So the asking price is much lower. Now, remember, for those of you, when we first started on this journey of explaining to you options, now, if you're a shareholder, then you're just long-term holding AMD stock or whatever the stock is. So feel free, just sit back and, just enjoy the information that we share. But if you're ever buying an option contract, you're always buying at the ask and you're selling at the bid. So just imagine it like real estate. If you are buying a house, you're looking at the asking price of what the owner has put up. You probably are going to buy it there. If you're selling, you're going to be receiving multiple bid offers from multiple people who want to buy from you. So same rules apply here. Now, notice what we did here is we said that the bid is currently at 80 cents as a credit. Now, across the board, it's at a credit. Now, that's the asking price if you were buying it at the asking. Now, the thing is, we want to pay attention to where we're selling, because now we have an 80-cent credit per contract. So instead, we're going to go to net debit. And this time, we're going to put it at 0.8. The reason why we say that is because now when you do a net credit, it's going to roll the position, and then at the same token, it's going to take your profits off the table. You see what we just did there? So what we just did is we sold the position, and then ultimately we bought a new position and we took profits. You didn't have to go through this whole process of I'm selling this and I'm selling that. No, you just did it all at one time, and then boom, now you have your profits off the table with a further expiration period with a new strike price. Now, when you think about it, since we don't see that those positions are open, this is exactly how it's going to look like when you go in on Monday when quadruple witching has begun. You're going to see that there's going to be more expirations that will open up for you here. And from there, you will literally just say, hey, I'm ready to choose my next expiration period. Now, here's the thing. A lot of you are asking, well, what if I want to buy more contracts? That's fair. So if you want to buy more contracts, especially if you're rolling, here's how it changes though. So say, for example, I want to buy 10. Now notice how that number changes. So now instead of me having a credit, it's now at a debit. So if I did this at market type, then that's placing me at $4,337.20. It's taking the amount of, say, for example, what my position already is. And then on top of that, it's also taking into account the makeup, hence the reason why it says it's priced as 2 to 5. So the quantity spread, or the spread quantity, is 2. So with that, I'm having to cover the excess costs. So just keep that in mind if you're looking to buy an excess amount of contracts. Now, if you don't want this to be you, then you can forget the rolling and just say, hey, I'm going to just take profit. And if you've already taken profits, kudos to you. That's fine. No judgment. Then what you're going to do is the money that you have sitting on the sideline, you just completely skip this whole step and just go ahead and just buy your options contracts. And that's how you do it. It's just that simple. You just preview and place order. Now, of course, we can't place the order because of the fact that, one, unfortunately, the Agent Smith account only has $1,100. And on top of that, market's closed. Options market is only open when the actual stock market is open. But the advantage, so here, a lot of folks are asking, what's the advantage of rolling a position? The advantages of rolling a position is you can do all of this in one transaction, one swift transaction, and move on. So which means that if you already know what your strike price is, if you already know what expiration you want to be at, then you can just do all this in one swoop. So which means you sold and you bought at the same time. And on top of that, you took profit. The main idea is to take profits off of the table and to ultimately find a new position. Now, if you're smart and being a little bit more smarter, let's say, for example, if you're looking at a position, right? So let's just say hypothetically, in a perfect world. Now, of course, I'm playing with fake numbers. So just for the hints of it. So don't say, hey, Mark, you said this, because no, that's not what I said. But for those of you that are going to be picking new strike prices, especially for, let's say, your XLKs, you're probably not going to come back in at the 135s or the 140s. So you'll probably, and for your AMDs, you'll be probably looking at, especially if it's September 2022, you'll probably be looking at a further out time period. Now, the further out time period, notice that it gets a little bit more, well, here it's going to be more expensive. But if we take, say, for example, the XLK. So let's go back to, say, for example, the portfolio. So that way we can just play it all out. And for those of you that are asking about capital gains, yes, you have to account for capital gains. In this account, we don't have to, because this is actually an IRA account in which is being traded out of. So we don't have to worry about the capital gains tax in this account. So let's just say hypothetically, because clearly none of the contracts are available yet. Clearly you can see here. But let's just say, for example, you wanted to go from here to, let's say, a 160. Now, here's one of the things that I say: try to find a cheaper price than your bid price, but also be reasonable. So here, as you can see, we have a net debit of, let's say, $3, or we have a credit of $3.80 per contract. Now, there are 80 contracts that are within quantity here. So what we'll do is we'll take the net credit at $3.80, and we'll roll it to another further out date. And so mind you, I'm getting ready to buy another 80 contracts, but at the same time, I'm taking $30,000 off the table.
Wow, that's crazy.
I like it.
That's a game changer.
And this is only one commission, right?
Yeah, so the estimated commission is literally just $80.
As opposed to if you did two separate transactions.
If you did two separate transactions, you'd be paying the commission to sell, as well as you'd be paying the commission to also buy. And that's just a sneak peek from the burner account in the Come Up series.
Wow, this episode was jam-packed with serious jewelry.
Indeed.
My iPad notes are like...
we see you scrolling.
Man.
So just as a clarification, if you're trading, say, for example, within a Roth or any type of IRA account, you can easily take profit. You're not going to get hit with the capital gains tax. Is that correct, Chris?
Correct.
Financial advisor.
Correct.
There's not going to be any capital gains tax there. So it's okay to take profits and to literally sell your positions. You don't have to worry about like, okay, hey, do I have to be within a year in a day? Like if you're in an individual brokerage account. Now, if you are in an individual brokerage account, then you need to be mindful that essentially that you could be getting hit with the capital gains tax. Well, not could be, you will be getting hit with the capital gains tax. And depending on the timeline, if it's a much shorter than a year and a day, then your capital gains tax will be probably a little bit higher. Versus in an IRA, then there is no.
This is definitely an episode that's like you're gonna have to watch a couple of times.
Yes.
You need to form some study groups, you know, do it like law school style, get your outlines together, assign portions to each person, and then come together with notes.
So is there anything else that we have on our agenda? Because
I mean, it's 6:07.
I mean, Chris, you got time?
I got time.
Oh, today I got time, cuz.
All right. Well, there were several, let me see. There were some questions. I feel like most of the questions were actually answered. Y'all feel free to light up the comments if your question was not answered.
Okay.
Let's see. There was a question from, it's gonna take me a minute. All right, so I believe Coach had a question and I think it was answered, but I'll just read it again.
Okay.
All right, so for small business owners, the best method to invest business profits into the market, like planning for tax implications within a traditional IRA and 401k when it comes to withdrawing funds at 65 and a half or earlier.
Okay, so a little bit of loaded question. So the main question is, what can he do once he retires or pre-retirement?
Once she retires, yeah.
Yeah, so once so go ahead.
For Coach, so Coach wants to know, for small business owners, what's the best method to invest business profits into the market? So that's one question. And then the second question centers around like planning for tax implications within a traditional IRA and a 401k, as far as making withdrawals at the age of 65 and a half or earlier.
Perfect. So for investing business profits, right? So if you have some profits, but you're not actually maxing out your plan, I think that's step one. right? If you have business profits and you have extra money inside of your account from the business that you've generated, but you have not maxed out your solo 401k or your 401k plan, or if you're just doing a SEP, I know we didn't talk too much about a SEP, but again, a SEP is only an employer contribution, not an employee, right? So I think that's step one, right? Step two is that, okay, well, we still have business profits. Then again, now we got to go back to our CPA, right? If we're trying to say, hey, look, we've got business profits and we're going to be taxed heavily, then there's other tax planning and strategies that we can do, right? The third thing is that we can open up that business brokerage account and actually trade money from the business inside of that brokerage account that our business owns, right? And then I guess the last part of the question would be, okay, transitioning. So now let's say that we've been investing, we've been doing the rolling fours for the last 4 or 5 years, right? We're going to be having $1 million, $2 million, $3 million plus inside the account. Now I'm at retirement age. Now I need to start pulling money out. Well, see, that's why it's so important to where you got to have a balance of how much money needs to go into my plan pre-tax versus after tax. Because now if you're maxing out your Roth contributions, you're going to be able to take that money out tax-free come 59 and a half. Versus any money that's in a traditional account, again, you're going to have to pay taxes, right, as income on that money, right? So it's about your, and this is where if you have your CPA and your financial advisor should be best friends, right? Because there's things that I'm going to have to communicate to your CPA on, and there's also things your CPA needs to do, but he needs to inform me. So if you don't have that team together, you have a broken plan. So I think it's not like a one word answer. It has to take two people that's looking at your tax plan all throughout the year and also planning for long term on those distributions.
Another question is, and I'm going to actually do the emoji with it. How to become a millionaire by 2021? That was the exact question.
I mean, did we not just talk about this in last week's episode?
Rolling fours, right?
Which I feel like we need to
go for it.
Point some things out for the rolling fours. So y'all, please get your calculators out because we didn't do this math ahead of time. We did that intentionally so that you all would have to do it. But so okay, back to let's talk about the business owners. So business owners with their 401k set up through their business, you said the contribution was $19,500. So talk to us a little bit about like what that's going to look like. So we got our business owner, Betty, the business owner. She is ready to go on Monday, and she's setting up her accounts. She's gonna, let's just say she's throwing that all in XLK. So my question then is, if you start off with the 19,500, yep, and let's not even talk about like the initial accounts.
Yep, initial money doesn't matter right now.
Right. And we talked about there was like 3 different accounts. Like, yep, walk us through like where this money is going. Like, what does that look like? Is she putting all the money, that 19,500, in one account, and then she has some money like in a savings account? So I'm really trying to get to like, we're looking at a year, right? And we're setting up our emergency fund. Let's just say the person has, I don't know, let's just say they have $100,000 or something. So we're setting up their emergency fund. We're setting up their, I believe it was 3 accounts you said. Yep. So just tell us a story about that.
So if somebody has a lump sum, basically starting with a lump sum, mm-hmm, right? So if we have a lump sum now, again, this is kind of a tougher, I guess, to generalize it, right? But if somebody has 100 grand, we could go ahead and break it up, right? Somebody 100 grand, we could go ahead and front load our retirement accounts, right? We can start from the back, right? So that now we're moving 19,500 off the table. And you're saying a business owner, correct?
Mm-hmm.
Boom. So now that part is off the table. Now we got a left 80,500. So what we can do from there, it depends on how our business is running. Do we need extra cash to keep on hand for our business? Right? If that whole $100,000 is completely free, our business is running well, we don't need money for payroll, anything else, then most of that money can be invested, and I would just use that into the business brokerage, right? So, but if our accounts, if we don't have, at least for a business standpoint, at least 6 months of payroll expenses needs to be saved, right? If we don't have, I call that my business war chest account, right? For any type of emergency, if something happens, coronavirus, anyway, then that needs to be set first, right? Then the second thing, again, that short-term account, that's kind of, if you're a business owner, your short-term account is kind of like that business brokerage, right? That goes hand in hand.
Okay. All right. All right. Let's see. Next question here that we got. Again, I feel like you've answered most of the questions, and the ones that you didn't would be.
Market at all today or no?
Oh, you want to talk about the corrections?
Yeah. Just asking for a friend.
Yeah, because I feel like most of the questions were answered. Chris, you did great.
Okay.
Yeah,
awesome.
most of the questions.
Well, somebody asked. There was a question in the super chat saying, "What type of investing account do I need as a small business owner with an LLC if my business is still making less than 30K annually?"
Same, that you can still have a solo 401k.
There you go.
Yeah, it is. So having a 401k or solo 401k doesn't really necessarily mean that, okay, I have to make X amount of dollars to have one. You could go ahead and have one.
Yep.
All right, I do want to point something out. So last week, the example that we gave for the 17,500, that was an example. It was a sample.
That's an example.
Okay.
Just
so
an example.
what we're talking about when I said 19,500, that's the maximum contribution that a business owner can contribute to their 401k.
Yep.
On a W-2 side, and also an employee, right? They both have on the W-2 side 19,500. Remember, the business has the option of that profit sharing of the 25%, right? So
yeah, so I just want to get those numbers
straight. And can I mention something about that?
Yeah.
Y'all, if you take 17,500 and multiply that times 4, what is the number that you get?
Put in the comments.
If you really think about it, we did a rolling fours episode along with talking about a 70-30, and I gave an example of how much a person made that year.
And we also have people that are just starting out with much smaller numbers. So
doesn't matter where you start. It's just, a lot of folks get caught up into how is it that you start or what's right in front of you. If you're an investor, you're looking beyond that. And if you're an investment trader, then you're definitely looking beyond that. And so I always say, don't let the moment deter you from, say, for example, the journey. The journey is more than what the moment is right now. So I'm seeing it throw up in the chat right now. So apparently everybody did their math. So if you think about it, 70-30, and if you multiply the 17 and a half times 4 quarters in a year, you save $70,000. 70% of the 100K, you just save 70% of what you make that year, just as a hypothetical example. So just remember that, y'all.
Yeah. Let's get into this market correction, because this is the last time we'll be live before the 14th. Well, with the exception of the after party, but.
Oh, of course. All right. So let's talk about it. Let me go ahead and set up my handy dandy station here. Don't worry, Jolene, I'll zoom in.
Thank you, appreciate it.
All right, so let's pick a company.
Square.
All right, so here's to you, Square. So as we can see, Square has been getting hammered just like everybody else. Now, let's look at it in the full chart. I hope everybody can see it. If they can't see it, then I will go ahead and that's great. If you can't see it, let me know, because I can just reshare the screen. I'll just reshare the screen. Yeah. Can you see this?
Yeah, you took the volume and stuff off. It's just the line. Is that where we're putting?
Yeah, it's just the line. It's just a line. No volume, none of that. Just very basic line graph.
All right.
Now, do we notice anything about Square here?
Let me move my mouse. I mean, overall, what is this? How many months? 3 months? Overall, it's an upward trend.
3-month chart. If we look at it over 9 months, there we go. That makes it a little bit more simpler for everybody.
Yeah, we see an upward trend.
Okay. But if you notice, we corrected down from, say, for example, 167 to 141, then came up to 143, and now we're at 141 again. Anybody else see the range here of 137 to 140?
Yeah.
So we're kind of toiling in this range. So a lot of you folks are asking, like, hey, Mark, is there still more pain ahead? Possibly. So anywhere where you can see, say, for example, stocks correcting anyway. So again, we were at the 52-week highs. which is 165. And then we came down by roughly about 10%. We came up off of it. We bounced off of it immediately. I mean, you want to think about it, like let's do a comparison for all you Apple fans out there.
Oh yeah, they're throwing Apple in the chats right now.
I'm sure they are. So same rules apply. 134 all the way down to 113. Now Apple's had somewhat of a stronger correction because of the fact that you also have to shave off all the frothiness that was at the top, where people were buying because of FOMO. So if you take away the FOMO, you really put it here at the real, which is the 128, and then it corrects all the way down to about the 113 levels. So notice anything here? 114 is the range. 110, 109 is the lower side of the range. So we're still playing at these levels. And notice when we closed today, we closed above the 113.46 at 113.83. If you go back almost about close to a month, or a little bit over a month ago, we closed at 114.81. So it's got to trade within this range and essentially to stay alive. Now, when you see a correction take place, typically it drops, and then of course the stock rebounds. But then what we have is called a technical period, where we call it a retest. Now, typically around this time, we're going to see stocks trying to find its leveling, its footing, to see if there's support here. If there is no support here, then it's going to break past this and then come down to here, where some folks are saying that it could come down to the 99/93 levels, which is very, very fair. But I think that also you have to take into consideration where we were at today. We were pretty much trading at the 117 until we got worried about what was happening in Congress, which pretty much shot down the market because a lot of retail investors, a lot of retail traders, and if you understand what I'm saying, especially for a company like Apple, once upon a time, Apple had 88% retail, or not 88% retail, but 88% institutional ownership. Actually, it was at 92% institutional ownership. I think it currently sits right now at 62%. So when you put that into perspective, there was a lot of retail investors that were jumping into the stocks, and pretty much a lot of institutional investors sat the sideline waiting, and they still are waiting. Now, some folks are slightly nibbling, just getting positioning, because when they think about it over a 5 to 10 year period, then this is going to be considered very cheap in comparison to where Apple will be 5 years from now. Now, see, a lot of folks think that I only talk about options, but I'm also talking about just purely the stock here. And the rules apply pretty much to any company. So if we look at, let's say, outside of Apple, let's go a little bit outside of tech, and let's look at XBI, biotech. A little bit different, does have a tech in it, but same rules apply. Now they've been going, and typically when you see this is typically what a normal correction looks like. It never just like drops significantly. It drops precipitously over time. Hence the reason why I say an average time of a correction lasts anywhere from roughly 14 days, and it can go all the way to 45. So if you really think about it, they've been going through correction ever since from hitting the 52-week high in this ETF at 120, and now it's trading at current levels of 104. And as you can see, it's well within the level of where it was, where the last level of support, which is beyond this area. So if we look at, say, for example, another area in which that has been doing well, let's look at consumer discretionary. Now, a lot of folks are going to say it's just Amazon, but that's not just true, because you are also seeing other companies like Starbucks, McDonald's, they're trying to rebound as well. And Home Depot has been doing fantastic this year, them and Lowe's, and also Walmart. So if you think about it, it's pretty much the same consensus. Consumer and discretionary and tech, they typically mirror each other, and it's not just because of Amazon. There's other companies, like I said, that play a role in this. So these are sectors, by the way. So they're telling you exactly what's happening to the sector. And the beautiful thing about seeing it is, here's the beautiful part. If I look at XLI, which is the industrial sector, I'm seeing a slight little modest correction as well. They're also pretty much around the range of close to 10%. Now, when we look at where, say, for example, your apples are, they're still down 8% or 8 to 9% for the month, if we're going from September to really where we are today. So a lot of you are asking, okay, Mark, what does all this mean? It's going to take time.
And this is going to be a small, when you look at it in the grand scheme of things,
So
over, say, for example, let's say a 2-year period,
Mm.
you see how small that is in comparison? And this is just XLI. Let's look at XLK. In the grand scheme of things, it's a lot smaller than what you really think it is. Now, this is huge. If we go back and look at it over the last 10 years, you see this? Huge. We've seen this before. This from here, correction. These things take place. They take place in time. And there's nothing wrong with that. I mean, a lot of times corrections are what they give validation to the market. Markets are made to go, as you can see, the stock chart, its trend is still trending upward, and it's going to still go upward. But in the short term, it's showing you that it's dealing with a little bit of pain. But if we look at it over, say, for example, a month, we're still higher where we were a month ago in comparison to where we are now. Now, mind you, it's a small sample size since we're only on the 10th day of the month. But we've literally come back down to really August 11th levels. If you really want to look at it in totality, if you're taking in all of August, though, from August 1st or from the end of July, look at how far we come from there. So, I mean, and that's one of the main reasons why we say stick to the script. Now, a lot of you are saying, hey, Mark, where's the bands that we're so accustomed to seeing? There you go. We're still well within the band. We've come across, say, for example, we're no longer at the high moving average. We're pretty much in the low to mid. And it's trying to find positioning here. Typically, when you see a stock move like that, you typically see that it's jockeying for positioning. A lot of you are like, well, hey, Mark, that's just one blip on the screen. Nope, same rules apply. Whenever you see something significantly drop across the board, you see that it's trying to find its footing. And that's exactly what's happening in the market right now. And that's how the West was won.
That's it.
All right, so we're coming close to 6:30 here.
I know, right?
Mm-hmm.
Oh, somebody said, can I look at XLE? I mean, if you see the chart, I mean, it pretty much looks almost the same as XLI or something like that.
Any final words in our last few moments here?
Mr. Bush?
Man, I just appreciate you guys, man. I just know if everybody stays focused, if everybody sticks to these scripts, the next 18, 24, 36 months, it's really going to be a game changer. The biggest thing is now is that, okay, just focus on making more money, earning more income, right? So we can get up to that 30/70. So now we're actually every single quarter, right? On again, this coming up Monday, we're putting money into these accounts and growing our wealth. I mean, that's the game plan. Is not just focus on what we have, but now focus on what we can go get.
And I will add that, you know, with that, with your expenses, try and circulate that, you know, within either, you know, your family, friends, you know, Black businesses. Like, let's keep the money like up in here. Okay, we're taking money out of the market and then swirling it around all of us. Okay, so I do want to point that out.
So I think the best thing that I can tell people in moving forward to pretty much piggyback off of everything that you guys had said. First things first, I wanted to shout out some folks. I'll just say shout outs to the people who got the clues correct and they were able to answer it. We had 2 people who got it right. And so I had the opportunity to sitting with one of you for an hour-long session. I hope that you were able to receive value in that hour-long session that we had. It's still not too late for many of you. We have 18 more slots for folks in whom which, you know, would like to try their luck at being able to answer it. If you go back and watch some of the videos, I mean, I lay out a lot of clues there for you, a lot of clues. Mm-hmm. And, you know, really just look at, you know, why is it that we're here?
we kind of answered it. But we're not going to make it super duper easy for you, because then, I mean, you got to, use this. It's from the shirt in which that I mentioned, where there's a clue on the back. I'm not wearing it today, but I mean, if you go back to one of the episodes, you'll see it. And I think the best thing that I can offer to each and every single one of you is, don't get so caught up in a lot of the hype that because I know many of you watch like shows like CNBC, and there's nothing wrong with it, but at the same token, it's just like, many times they're living just like the CNNs, the MSNBCs, the Foxes of the world. They're on a 24-hour news cycle, and they're going to consistently just feed you the same stuff. And then ultimately their goal is like, okay, hey, there's somewhat of an agenda here. Stay focused. Stay focused. It's like, you'll never make it anywhere if you're constantly allowing all the noise that's happening around you literally deter you from the process. Because then when you allow that to get inside your head, then you start thinking differently. Then you stop sticking to the script. Then you stop focusing on the journey. Then you get spooked. Then from there, you're no longer making smart decisions. You go back to making, boneheaded mistakes of trying to gamble. And then from there, you lose money. And that's not our focus. That's the reason why we say stick to the script, stick to the long term, and stick to the strategy. If you do that, then a lot of this stuff, you'll look at it, say, for example, 2 months from now, and honestly, you'll be sitting there and saying, yo, I see beyond the BS.
Yeah.
That's the focus here. We're going to give it to you straight, no chaser. One way or another. And then when we miss the mark, we'll tell you. Like, for example, we missed the mark when it came to Boeing. Do we still think that Boeing is a good long-term investment if you want to hold for stock? Yes. But when we talk about like what can give you better value as of right now over the next 12 months, we just don't see that as Boeing. That's the reason why we remove Boeing off the list. So a lot of folks are asking, should I just go ahead and just leave that as let this be the last word, Jolene, of why we chose Tesla?
Yeah, I want to say something that's not related to this. So
go ahead.
Oh, you want me to go?
Yeah.
So I'm sorry, guys. I wanted to make sure that this was addressed. So I guess it was Tuesday. Gosh, time goes by fast. So on Tuesday, on Tuesday, there was the chat, going on about the group on Telegram. And I just want to take responsibility for the words that I used. My language was reckless when I said that the Telegram group was fraudulent. I said it in jest, but at the same time, like, I'm taking responsibility for the impact that my words have. And I also want to point out that we, here we're moving, and I've said this before, we're moving like a family. So if one person says something, that doesn't give anybody license to jump on them or light them up in the comments. So we got to keep the culture, even in the chat, we got to keep it peaceful. Mark always says, be kind to one another. Seriously, y'all. So don't be coming for people. This is all love, number one. And number two, if you are not on Facebook, if you're not on Facebook and you still want to have some level of community, when we're not live, then feel free to join the group on on Telegram. It is called the Family Cookout. And that's where several people that watch the come up are congregating. So if you can do both if you want, but I just wanted to put that out there. Again, don't be coming for folks in the comments. That's not cool. That's not what we're even about. Instagram is a whole other story, but for YouTube life, for YouTube, y'all, we really gotta, be cool. And then also, hit me up if you want to be like a moderator for the chat, because I'm seeing bots, I'm seeing all kinds of extras. So hit me up if you want to be like a moderator for the chat, and we can figure out how to make that work. But that's all I wanted to say. Okay. Shout out to Eddie Rowe.
So I'll leave everybody with this. And there's no charts needed. We're gonna just talk purely like simplicity. Okay. So for those of you that are not following ARK Invest, I don't know why, but I mean, they're a dope firm that they know how to pick them. Now, for anybody that wanted to know what I was doing with Nicola, you may have to follow me over to Instagram live for after the come up series, so that way we'll talk about it. But here's the reason why I chose Tesla, and I mentioned this a little bit back in the sense of how is it that you look at Tesla as a company. So now this is me removing any of my bias aside. There's three ways in which that you can look at Tesla. You can look at Tesla as an energy company. You can look at Tesla as a automobile company. You can look at Tesla as a technology company, right? Now, let's just get the obvious out of the way. If you look at Tesla as an energy company,
pause.
Go sit down, get out. It's not. You clearly missed the boat. Have a seat, sit back, have some punch, have some bench, and watch the game. If you judge Tesla as an automobile company, fair. You see them doing record numbers as it pertains to vehicle deliveries and all this other great jazz. The other part that you have to look at is also its licensing strategy, its supercharging network that no other electric vehicle maker has, or let's just say auto manufacturer has. You also have to look at the fact of what is it that they're doing in preparation for full self-driving, which leads into, and of course, battery, but segue. Then we look at Tesla as, say, for example, a technology company. Now, if you really think about it, if you're really, really looking at Tesla as a technology company and as an automobile company, hey, kudos to you. It's either, we don't know yet, right? And technically it's listed as a consumer discretionary stock. So, go figure. But if you're looking at Tesla as a technology company, then you're looking at purely its software in which that they're bringing to the table and how much money that they're investing into the full self-driving and autopilot ecosystem of what Tesla is, something in which that they completely beat out any of the major players that are out there on the board. Now, I'm going to get real honest with folks, but I just want you to know that don't shoot the messenger. So some of you are saying Neo, some of you are saying Lucid, some of you are saying Nikola, some of you are saying Workhorse, and all those companies. And then on top of that, there's Rivian, which they're not publicly traded, but at the same token, hey, there they are. Here's the problem with each and every single one of these companies. And let's also add in Google Waymo. Google Waymo is the only company through Google, Waymo through Google, is the only company that's really significantly moving the marker as it pertains to their test technology. Now, you've heard of Apple, Uber, and everybody else being in the space. But Waymo has actually been testing in Arizona. Problem with that is they're not getting enough data. And the benefit where it benefits Tesla over, say, for example, any of these other players is the fact that every single owner of a Tesla vehicle now gives data to Tesla, so that way the company and the technology itself continuously gets smarter. So that is brilliant. They turned every single vehicle owner into a beta tester as well as data mining for the company, so that way they can improve the technology. Now, some of you are starting to hear about taxis, and some of us have talked about it a little bit before then, but we're not going to say anything. But we did talk about taxis, in which that you never know. Imagine Tesla competing against an Uber and a Lyft. And keep in mind, those vehicles can also record with where it's going, what's happening on the road. It can also pick up the technology. It can also pick up its surroundings around it, the light structures, the Department of Transportation, information that it receives, and how it interacts with the road. That's huge, because then it goes into people driving as a taxi service to years later, decades later, to, say, for example, taxis with no driver. And who do you think has a front row seat there? So then if you're looking at that, along with its battery technology, along with its open source patents that it hasn't even started charging for, and all these other things, ask me this, since you're hearing a lot of BS about a lot of folks saying that this company is overvalued and overhyped, with all the information I just gave you. Sorry, I'm having trouble hearing you. I'm sure you are. But if you are, think about it. Is Tesla really overvalued? I'm going to just leave that there for you. That's your homework, to find out if Tesla is truly, truly overvalued, or, say, for example, depending on how you judge this company, whether it's a technology company or an automobile company, what will it be? And if it's an automobile company, then maybe you have an argument. If it's a tech company.
Water. Sip, sip.
All right, y'all. It's been real. I got to get it over to the after show. Hopefully that you two will possibly join me. You know, I know that those comments stay lit. I mean, you know, Jolene got those trigger fingers over there. So, but thank each and every single one of you for being a part of the show. We love each and every single one of you. And like I always say, be kind, be you, be focused, stick to the plan, stick to the script, and always strategize and stay focused. Until next time, I'm Mark Monroe.
Jolene GC and the place to be.
Our guest.
Oh, sorry, Christopher Bush.
And this has been your Come Up on Hot Take Thursday. We'll see you guys next Tuesday. Have a wonderful weekend and good night.